There is obviously some political headwinds at the moment. We're also in this interesting time where we have potentially the largest LBO in history taking place with Walgreens KKR. Whether or not it ever happens remains to be seen, but it's interesting nonetheless that it's out there. You also have all this dry powder on the sidelines, sort of records amounts. It must be a fun time to be running a private equity firm.
It's an interesting time. Thank you for inviting me again, Ed. I'm being very optimistic. I think there's many structural reasons to be optimistic. The low interest rate, of course, the volatility of the stock exchange markets. CEOs and entrepreneurs are looking for private partners. And also, let's be honest, this industry, the private equity industry, has amazingly professionalized over the last decade with global networks, with expertise, track records. We are responsible, committed. So, you're thinking that's where I find the way to create most value. And then one day you go back to the public market when you're strong enough as a company to be weathering volatility and up and downs in that market.
It's also become much more crowded, though, as an industry. There are many more players, also a lot of the sort of newer players, traditional people who would have invested in private equity. How does a fund like Eurazeo differentiate itself and actually, prove to LPs that it is better at creating alpha than others in the space?
Crowded, but much bigger, though, Ed. Compared to 10 years ago, our market, the number of companies being held by private equity investors is twice as big. There's way more companies under our ownership. So crowded, yes, but much bigger. The dry powder, amount of money raised and not yet invested is bigger than 10 years ago. I think it's twice the amount. But relatively speaking, it's not way bigger because it's about 3 years of investment. I remember it was like 5 or 6 years back then, 07, 08. And it's about 30-something% of our assets under management. So there's more money, absolute terms. But relatively speaking, because our underlying addressable market has grown so fast, it's way less than what a number of people think, I would say.
But then talk to me about that market. Where are the opportunities? Because we always hear that private equity is much more sophisticated, much more able to do these big and complex transactions. Where are you seeing them?
Well, the alpha, in a way, where you said, where do you make the difference, you, Eurazeo, or the industry more generally, where do we get the alpha from? Well, first it starts with the deal flow, Ed. You have to be rich in terms of number of opportunity and be super selective in the choices you make. We've been selecting healthcare, education, payment as three sectors in which we have trust that we can accelerate the growth. Then it goes to operating excellence. Those times where you were making easy money by deleveraging the companies or just planning on an upturn in terms of multiple or long-term guns. So that means if you don't bring operational excellence, and it goes through up to being responsible, committed, ESG compliant. We pioneered ESG 10 years ago, and that was seen as pretty early 10 years ago. This is seen as an enormous competitive advantage today. So this is the operational excellence part. And then I think you have also to make your decision in terms of exit, the timing of when do you invest and when are you able to exit either to the IPO market or to corporate buyers also makes your alpha and how you stand out. The values that we are supporting in terms of commitment, being ambitious, global, taking risk. I mean, we are entrepreneurs ourselves. We're not just investors. We're entrepreneur investors. We have values. We're responsible. So at the end, you do get it. Why are we, the go-to partner from CEOs or entrepreneurs? Because we bring to those guys way more value than they can see or they can get from the public market, for example.
Let's move on to the politics, because obviously, as so often is the case, private equity has become a kind of political pinata during this election cycle, candidates queuing up to sort of lambast the industry for various ills. Liz Warren actually just this week, I think, said the private industry, talking about Taylor Swift, she's one of many who has been threatened by private equity. They're gobbling up more of our economy, costing jobs and crushing entire industries. Does she have a point?
Okay, two things. One, where will our pensioners find return if there's no more allocation to private equity, which we all know has been the highest return industry, way more than all the liquid markets. And still, the pensions are not very much exposed to private equity. So most of the big institutions, being the pension funds, the sovereign funds, the insurance company, they are willing to continue to enlarge their exposure to private equity. And why? Because that's where you find return. Does she have a point? I think this industry has been creating more jobs than this is said. I think this industry, if you take some specific example, you can always find specifics where it went sort of bad. But is that related to private equity ownership, or is that related to the underlying sector? And we talk a lot about retail in the US because the retail has been devastated. Is it related to private equity ownership? I think you have my answer. And then from a government standpoint, that's interesting because, you know, being French and Eurazeo being a European and then now a global player, it's interesting to see the debate that you have in this country right now. And what I see in Europe and also in Asia, you know, we're getting pretty big in China, where the government, specifically in France and in China, is supporting and making sure that insurance companies and sovereign funds are effectively investing in the private equity, in venture, in growth capital. And there's two reasons for that. One, because they need to find returns for their pensioners, and also because they know that by supporting those industries, they're giving birth to the future leader in, you know, high-tech, disruptive technologies, platform, you name it, in their own economy. So, you know, it's a win-win.